Hello, fellow traders. 'Tis I, the Rumpled One. It's Monday, December the 14th, the year's 2014. Let's talk trading. The market should not do anything. So just remember, these videos are for educational purposes only. Your results may differ from mine. If you watched my video from yesterday, Sunday, you would know that the pound dollar gapped up. So I had placed a trade because statistically those open gaps close. But the thing is, the market should not do anything. If you take a trade, the market should not necessarily go in your favor. It doesn't matter what the statistics are. Doesn't matter what you want, what you think should happen. The market's just going to do what it wants to do. You have to understand what the market is. The market is a bunch of people placing orders out there. Now, the thing about orders are they basically come in two flavors. You have market orders and you have limit orders. Well, most of the time in Forex, we're probably placing market orders. And when we place a market order, what it means is if you place a market order to buy or go long, what that means is you are going to get filled at the lowest limit order price. Conversely, if you want to go short, you are going to get filled at the highest limit bid price, because those are people willing to buy and sell at certain levels. And you're saying, I just want whatever, just give me the best deal possible. And that's why sometimes when you place your order, you don't get the order, you don't get filled at the price when you click that buy button. Somebody else may have beat you to it, and the market, quote unquote, moved on you. And so you got filled at a level that didn't benefit you. But every now and then you'll do this, you'll get in and it market will benefit you because somebody else moved the market before you. And so what's moving the market? Moving the market is when an order takes out, a market order takes out a limit order. If you think about it, because that's how it happens. That's how the market moves. So usually the big institutions are placing the limit orders, and the small fish, the retail traders, are placing the market orders. But that's not always the case. So the point is that the markets, they should not do anything. They're just going to do what they do. And it's like, oh, it should come down. Oh, it should go up. Oh, it should. No, it's just going to do what it does. You fact, even in life, you really should get rid of the word should. It's kind of like never say never, never say should. Your job as a trader is to correctly identify what's going on, anticipate what's going to happen next, and place your trade accordingly. And in all cases, make sure you have your stop loss in place, the amount you're willing to lose per trade. And as you can see here on the pound, we're at 33.27. And now, when you look at the day, you can see here it actually broke the previous day's high and came right back down out of that wick zone. Exited both sides of the wick zone. And it still hasn't filled that gap. In fact, none of these pound pairs have filled the gap. In fact, they're the only pound pairs, looks like they are the only pairs that haven't filled the gap. Whether or not they fill for the week remains to be seen. And if you look here on the daily, you see we broke out of the opening range for the month, that first day of the month. We broke out by 4 pips, a break nonetheless. And here on the downside, it broke out by about 26 pips. And we are right near that monthly open. We're 5 pips above it. For the year, we're 80 pips above the yearly open here. Oh, and there was a trader that wanted this indicator right here. I guess I'll do a little spoiler maybe. I'm going to talk about indicators. You know, you got to learn how to trade first. You got to learn how to manage the money. You got to learn how to manage your emotions, because indicators aren't going to do it for you. You've got to get your basics down. You know, the real reason, the main reason to use the indicators are to basically as a reminder or as an alert, but not as a crutch. I mean, really, you should be able to look at, you know, a chart. It's basically a blank chart, and see things. You know, why do I have the mid dot? Because the mid dot, you can kind of visualize it, but it's just nice to know. And then you can look back. You don't have to, it just helps. Say you have an open above the mid dot, which indicates, you know, you go long. You have an open below the mid dot here, indicates you want to go short. Just little things like that. But you can eyeball it. It's just nice to have it. But, you know, if you don't understand it, it's like using a calculator to do algebra. If you don't understand the algebra, you may get the right answer, but what good is it? Because you don't really understand it. It's a crutch. Back to this inside bar. You see we broke it to the upside. We broke it by 1 point to the downside here. The range, we've got the pound pairs 100 or better right here. Daily range, high minus low. The buy zone, the pivot was down here, so it was definitely shorts on, shorts on, shorts on. Since it didn't fill it, the biased traders would have ignored this long trigger, even though it was a nice one. But the bias is definitely short here towards the pivot, and even up here you'd want to go short towards the pivot. And you can see the rats had a great time here. Now let me show you something about this. Let me spread this out for you. Once again, trading what you see, trading things that you know. You know, you had a nice rat reversal here on the H1. Now, if you look here, you had a high of 37. Here you had a high of 36.1. So it actually broke the high by less than a pip. Well, this is not an inside bar technically. If I had my inside bar marker, this would not be marked because it was high. But sometimes it's kind of like hand grenades. It's close enough. So if you like those inside bars, you know, you could have used that as a trigger. Then again, you could have also found a trade up in the rat zone, and you see it would have been rewarded. Looks like price came down, touched the green rat zone, and bounced the outside of the green rat zone. And remember, on the first day, the rat zone will be the weekly upper and lower rat zone for the first day of the week. So that's not surprising. Okay, the weekly pivot, we still haven't hit it. And the daily pivot, we haven't hit that one either. Put this back to the 4-hour bars. And there's the daily pivot way down there. And here we go. Daily, weekly, only missed by 10 pips. And the monthly's already been taken out. Wick zone, we're coming right back into that wick zone. You see here, in and out. Price doesn't like staying in the wick zone. Doesn't mean it has to leave it. You know, once again, price should leave the wick zone? No, the price is going to do what it does. It just has a tendency about 70 to 80% of the time, it will leave the wick zone of the previous day. So it really, traders, that's something you have to be careful of. Using, if you're trading with statistics and thinking price should do something, or you want it to do something. I mean, yeah, price should fill the gap. Price, I want price to fill the gap. So my short, I make all those pips. But that's not trading. Trading is sitting there watching what price is doing as opposed to what it should be doing and acting accordingly. It's really hard to stress that because there's just some traders that they just keep tripping themselves up over and over again because they're not really trading. They're more placing bets. It's more of a gamble as opposed to trading. I mean, trading's something that you actively participate in. Gambling, you're more of a spectator. Sure, you place your bet and then you sit back and you watch what happens. Once, they say no more bets, you can't do anything but wait and see what happens. But with trading, you could be up a few pips and it looks like it stopped moving in your direction. Well, you can exit right then and there. In roulette, as the wheel's spinning and the ball's dropped, and they say no more bets, you can't pick up your chips. They're not going to let you do that. So, you have to actively be in the trade. And that's what comes in here, the money management. You take some profit before the market takes it back. You have a strategy. You can, take 50% off and move a stop, or you can move a stop up, because the thing is, every win is luck because you don't control the outcome. And that's just really a hard pill to swallow for some people. And, I don't know of any other trader that has a YouTube video or puts courses out there or writes books that really state that it's luck. I think maybe Mark Douglas may have said something along those lines, but I think he might be the only other one, because you can't control the outcome. So if you can't control the outcome and the outcome's favorable, you got lucky. And it doesn't matter how much or how little, or if you didn't do any preparation before you entered the trade. Yeah, you can get lucky. The difference is over time, you might not be so lucky. And in fact, I talked about winning ugly last week or the week before. I had a trade and Walmart told me it's a good trade. I go, no, it was a crappy trade. It was a really bad trade because I broke I don't know how many rules, and I go, if I keep doing that, it's going to bite me. So it's like, no, I got to say the market treated me well, smiled upon me, but don't do it again. Don't push your luck. And so if you watch football, the Steelers, I believe at one time they were 11-0. But that 11th win was really ugly, and Mike Tomlin just got on their case publicly. He just tore him a new one. And I guess they didn't pay attention too well because, funny thing about football players, you know, when I remember watching football as a child, and, these guys were grown men. Now I look at them, these guys are kids. They act like kids. It's all a matter of perspective. Point being is, these kids might not have been listening to the coach. And, now, they've lost 2 games in a row. They've just given up their home field advantage in the playoffs. So, if the other teams keep winning, if the Chiefs keep winning, even if the Steelers win the rest, the Chiefs aren't going to have that home field advantage if they make it to that conference final. So it's just important to recognize, if you have an ugly win, you got lucky. The market's might not do it again. You shouldn't necessarily win or lose. It's just like taking these trades at the line. You go short here, there's a winner. If you went short here, it reversed against you. Depending on where your stop is, you might have stopped out. So just remember, traders, it's not what you trade, it's how you trade it. So get out there and drain the banks. This is the Rumpled One, over and out.